I was investing in a market that had very limited product, which means I had very limited time based on the constraints of the 1031. I was like, I don't want that noose around my neck. Now other people will handle that differently, but because I'm a real estate investor full time, like I didn't see it as if it was going to force me to now be able to acquire less assets because I had less capital.
I'm curious, Victor, your experience, right? Being that you're a real multifamily investor, many years, right? What would you say your biggest frustration when it comes to the 1031 exchange?
The timeline after, because again, if you're transit like the last few deals that we did, that I got the opportunity to 1031 exchange, I just paid the taxes and moved on. Some people like, oh, that's crazy. But I knew, because I was investing in a market that had very limited product, which means I had very limited time based on the constraints of the 1031. I was like, I don't want that noose around my neck. Now other people will handle that differently, but because I'm a real estate investor full time, like I didn't see it as if it was going to force me to now be able to acquire less assets because I had less capital. I just saw like, wow, I'm going to buy a bad deal because I have to do this because I'm fixated on the amount of money that I'm going to lose, rather than pay the taxes and look at the amount of money that I gained by picking the right asset. So that was my take. Everyone doesn't have that take. But that was my biggest frustration, was a timeline and looking for product. Now other people may be in a different circumstance. What was your thoughts on
Yeah, I mean, I think you're spot on with that, Victor. I mean, we call it the shotgun wedding, right?
that?
We've all
Yeah.
got friends and family who've got married, quickly under the gun, maybe, or some uncertain circumstances, and they look back and they go, "Ooh, shoot, maybe I should have slowed that down a little bit." And or we call it letting the tax tail wag the investment dog, right? Where you're
Hmm.
just buying it because you've got this big, heavy tax of 25 to 50% of your gain being taxed,
Right.
right? And so you end up maybe making decisions that you shouldn't have, taking on more debt. That's the other thing about it too, is you need to buy equal or greater value, which also means equal or greater debt. You need to replace the debt. And so what you find is people just keep trading up. And if they get caught in the wrong time where they need liquidity, or these rate caps are adjusting, or they overpaid and didn't underwrite the property as disciplined as they should have, then guess what? The whole thing can come crashing down. And that's what happened in the 08 to 011 market, especially in Sacramento, where I was at. And we saw friends, family, clients lose half or everything because of the 1031 exchange. Is also why we're passionate about eliminating the need for it by providing what's called a deferred sales trust, not to be confused with the Delaware 1031, which is another form of a 1031. Where we can not only save a failed 1031, but we can eliminate the 1031. It also works for primary homes and businesses, cryptocurrency, which once the funds are tax deferred, this is the cool part, Victor. I'm curious what you think about this. The funds can be invested back into passive real estate deals with someone like a Victor, right? So you can go from like stock market or crypto or big primary home on La Jolla Beach that people own for 30 years. You can defer the tax, not using a 1031, and then you can invest it and diversify it across multiple asset classes with no timing restriction. And so my brain exploded when I learned about this, because we thought we were the Navy SEALs of investment real estate and brokerage. I grew up in the Bay Area with my family doing 1031s and building houses. And then we learned about it at Marcus and Millichap, going, wow, well, this will change everything.